The dollar is flying, the bonds are dying. So in today's video, we're going to take a look at what the next steps are for the market. Nvidia obviously had an explosive day to the upside. We're going to see how much further the market can go up, what the next steps are, everything. We're going to take a look at all that stuff, the S&P 500, the NASDAQ, the Russell, the dollar, the VIX, the bonds. All right, without further ado, let's get started with the video. First and foremost, yesterday the Fed minutes came out, right? And we started seeing headlines that the majority of the Fed officials were less confident and were saying that there wasn't that much of a need for a rate hike, which is bullish for the market. So Fed officials less confident on the need for more rate hikes. Fed minute officials uncertain that there needs to be more rate hikes. A Fed official split on more interest rate hikes, blah, 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 right? So this tool is the Fed watch tool, the target rate probability for whether or not the Fed is going to have a rate hike. As soon as yesterday happened, as soon as the minutes were released, basically what we're looking at currently, we are at 500 to 525 basis points in terms of interest rate, right? This number, so basically, if the Fed was going to maintain its stance and not increase rate hikes or decrease rate hikes, this number was going to remain the same. It was at 75% or more earlier, right? A few days ago. As soon as the minutes were released, this number drastically got reduced and the chances of a rate hike increased. This number, 525 to 550, shows an increase in rate hikes, the chances of an increase. So the left is a chance of a pause. This is the chance of an increase. Now we're at a 50-50. We're at a 50-50% chance of a rate hike now occurring into the June meeting. Heading into the July meeting, there is a 25% chance that we remain at this current level. And there's a 50% chance that we hit a minor small rate hike. And then there's a 25% chance. It's almost equal. There's a 25% chance that we get an even higher rate hike than a 25 basis point. So what the headlines are basically messing with people's emotions. And this is just proof in the pudding that essentially we're increasing the percentage chance of a rate hike as the headlines started to show some sort of ease. And it's really, really manipulated. So looking at this, it's much easier to see. It shows no change. The probability is 47%. The hike is a different percentage. So it's easier to look at it over here as well. It's more defined. And the website, you just type in CME Group Fed Watch Tool. And that's how you find this tool. All right, so we know that Nvidia is gone. It's skyrocketing. Cathie Wood sold her entire position of Nvidia back here in Q4 of 2022. So she sold it down here. And she missed out on over 100% move. So that's done. AMD, we already know, is doing really, really well also. And then when we look at the semiconductor ETF, this is also doing very, very bullishly. Cool. So we know that the tech stocks, we know that Nvidia basically added $200 billion to its market cap. It is holding up this market. And it's very important to understand that Nvidia is the pick and shovel. It is the provider of the ability to mine. So in the gold rush, the richest people were the ones that were providing the picks and the shovels. Nvidia and AMD, these companies are doing exactly that. Okay, there's no other new chips that Nvidia launched, nothing. It's just that people have to use Nvidia to propel their AI use. All right, so that's essentially what Nvidia is doing. And we saw that today also, Microsoft had another all-time high. It's started to continue pushing upwards as well. So Microsoft, Nvidia, AMD, all of these AI companies are doing really, really well. Google didn't make another high today, which is surprising, but overall, it had a big bounce, right? And this big bounce, again, was based off of the huge 30% move in Nvidia. So when we take a look at Apple, Apple is not as strong as these other stocks at the moment. This is still equivalent to basically what's going on with, we're going to take a look at it, but the SPY and Apple look pretty similar. So essentially right now we have resistance on Apple around 174, 174.50. So we need to see if over here is a very, very important level for Apple. If we can continue upwards above 174.50, 175, that is going to show extreme strength. But right now, this is a make or break point for the immediate term on Apple specifically. This is very, very major resistance. And then obviously below, we have the same support at 170. So we're right in the middle on Apple here. Take a look at Tesla. Tesla, not that much was going on. Of course, on everything we filled the gap that was left, right? Take a look at Amazon. Amazon's not doing way too much. We haven't taken a look at Meta in a while. Meta made another all-time high, but this is not like the most bullish candle, but of course Meta is very, very bullish in general. It looks very, very similar to, it just had huge earnings. Looks very, very similar to Microsoft and Google and the rest of them. All right, now taking a look at Netflix. Netflix, I think, is one of the most untapped stocks in terms of AI. It hasn't gotten huge love just yet. So one of the things with Netflix is that they are working with Stability Diffusion, which is basically the company that owns Midjourney. And Netflix, what they're doing is they're typing. So they're working with technology that allows you to type and create entire AI movies with just typing. So that is going to end up saving tons of money. And if the movies are made well, it's going to save a lot of money. And that is going to increase the market cap of Netflix because it's going to cut down costs. And it's like, I would be surprised if Netflix screws this up. I'd be very, very surprised if Netflix screws this up. This is the generative AI space for creating movie content and shows. No company has touched it yet. So maybe even Adobe, Photoshop, one of these companies is going to come out with some tool or some sort of add-on where they're working on this tool and make the most out of this hype. And I think that Netflix, I would be really, really shocked if they don't. And yeah, that I would really, essentially, you know, it would be a very skeptical long, probably get like some longer term calls for 3 to 5 years out. I would be super shocked if Netflix could not capitalize on this entire AI buzz, because it's literally right in their alley. They just need to put in, literally, to make this technology work, they literally only need to put in maximum probably like $10 to $20 million. And if they haven't done this already, they have to be working on this. So they just haven't come out publicly. So this earnings, if they mention something on this earnings date, I'm assuming they should. But yeah, let's see. But that's basically my thought process. Just look for companies that can use AI technology and then buy longer term calls, leaps that would be safe to buy, to be honest. And of course, I'm not your financial advisor. This isn't financial advice. But I'd be shocked. The way that Netflix actually started, it's very, very interesting. During the time when Blockbuster was a thing, right? Netflix was creating the technology to allow for streaming. While Blockbuster was already a thing, Netflix was creating the technology and working on coding the technology for video streaming. But the CEO said that they can't launch as a streaming service just yet because the internet technology, the bandwidth for your internet, back then, the internet did not catch up. So they were building for the future. So Netflix, that's how they got rich. They were waiting for internet bandwidth to become faster enough to stream. So initially what Netflix was doing was they were just doing, if you guys remember, you had to mail in, or movies would come to mail. That's initially how they were making some money, but they all the while they were building towards a streaming service. And as soon as good internet came up, that's when Netflix pounced on the opportunity to be the streaming service, which killed Blockbuster. So once again, I would be shocked if Netflix does not do this. Again, screw Netflix. I don't really care if they don't. It's an untapped market. All of these companies, either Adobe or Netflix, one of these companies has to capitalize on this, because it's such a huge opportunity. Honestly, if Adobe did this and then allowed people to pay like a monthly subscription in order for them to make movies based off of to make movies or videos based off of just text to video, it would be a game changer. So one of these companies has to do this, and there's a lot of opportunity. Just keep that in mind when you're looking at these companies, and just I would buy leaps on them, long-term calls, to be honest. Anyway, let's take a look at the NASDAQ. Obviously made another high here, and you can see that it just broke above. Once again, it scooped above the level of resistance from back in August, and now we are also above this level of resistance from back in April. So we're in a very, very major like resistance level here at 340. So it's going to be interesting. Now 340 is major resistance on NASDAQ, and this candle here is a doji. Obviously it's not the most bullish candle. We need to see how much further it can go up, or whether we're going to get a pullback, a huge pullback. Now, I wouldn't necessarily be very short the NASDAQ, because if you go short the NASDAQ, that's assuming that Microsoft, Google, Nvidia, these large tech AI companies are going to take a hit. But essentially, if the NASDAQ can start to teeter and show weakness, then shorting the SPY can also be more beneficial. So let's just keep it very simple. The NASDAQ, 340 is resistance, 336 is major support. Let's just keep it very simple. All right. Then after that, if it breaks below 336, then we have a gap to fill down at the high of the candle from Wednesday at 332.91. So that's that for the NASDAQ. The IWM obviously taking a huge hit. You can see that money is rotating out of these IWM stocks and into the tech stocks because of the huge influx of tech like doing really well. So the IWM obviously had a big move to the downside. We have major support at 173.62, and which is this 618% fib, which is the 50% fib, and then the 618% fib below that is 172. So we are at major support here on the IWM as well. But this sort of setup, usually, unless a lot of buyers step in, should come back down to this 172 area. And from here, the way that the market has been going and the way that the IWM has responded at these levels, we may get a bounce. But overall, 173, 60, and then 172 are major supports on the IWM. So now the fun stuff. Basically, today I was showing how 415 to 416. Yesterday's video, I was showing how 415 to 416 would be major resistance, right, on the SPY. And we just kept shorting as we got to these levels, and it worked out really well. It honestly worked out really beautifully. As soon as we got to these levels here, we just went short, and they just capitulated down. In the morning, we opened up a bit. We were holding, and we were showing resistance at 414.60 in the first few minutes, and just fell straight down, because this is a make or break zone. I was showing how Apple is also similar to the SPY in this setup. The SPY needs to make a decision here at this 415 to 416 area. And basically, the longer it takes to break above this level, then it's not going to be great. And then we're just going to fail, And then we have basically support down here at 413.70, and then this 412 area. So basically, we once again, we have resistance at 415, 416, and then support at around 412 to 413. Below that, then of course we have the 410 area. But so far, you know, the setup has been working out really well. Above 416, then of course the resistance is going to be 418. So just keep that in mind. For now, it worked out really, really well. Of course, tomorrow is going to be the start of Memorial Day weekend, and we need to see if there's going to be a lot of volume. We just basically need to see what ends up happening. But this is starting to look like a bear flag, right? And bear flags are generally bearish patterns. So that's why breaking above here is going to be very, very important. So if we were to make a fib level from the highs to these lows, we're basically at the 50% fib. And this 415, 416 area is the major level of resistance that usually is the resistance level for a bull flag. And it just, you know, it's perfect. It's like a perfect area of resistance here. So we're going to see how that plays out moving forward. All right, next, let's take a look at the dollar. So we know that the dollar has an inverse relationship to the market. It's skyrocketing here, right? The dollar, if the dollar is doing well, generally that means that the stock market should be falling. All right, so clearly you can see that the dollar is just skyrocketing here. Another thing here on the MACD, the MACD is lower than it was back here, and the price of the dollar is much higher. So this is showing a lot of strength on the MACD as well. You can see this blue line, it's lower, right? And back here, this blue line during May 18th, 19th, the blue line is higher, all right? But the price of the dollar is lower down here than it is now. So this is showing a lot of potential strength for the dollar. But essentially, yeah, this doesn't look great for the overall market. The only reason why the market is doing so well right now is because of AI and tech. And the dollar is showing a lot of strength. The other thing that I want to take a look at are the bonds. All right, so we can take a look at the tip. So we know that the bonds have more of a correlated relationship to the market, but they're not perfect. And what we're seeing now is the bonds just made another low today. And if the bonds are really breaking below levels of support, that means that the overall market should also be falling lower. But currently that's not the case. It doesn't always work out perfectly. But the fact that the bonds are getting this much short interest and getting shorted this much, it's not a bullish sign for equities. Same case for the 30-year bonds. We know that the 30-year bonds also have a bit of a correlated relationship to the market. If they're falling, then the overall stock market should also be falling. But it's better if you're a bull, you want to see the bonds doing well. You don't want to see the bonds just selling off like this, and this is not a good sign. So just be wary, be careful about going super long on the stock market during this time here. And then of course, last but not least, the VIX. The VIX does really well. We know that it has a negatively correlated relationship to the market also. If the VIX is doing well, that means that the stock market should be falling. So today we saw a red day on the VIX, obviously because we gapped up. But the VIX is holding this level of support here at 1850. And we need to see now if the VIX can continue bouncing up. Because clearly we can see that this is bullish on the VIX. The upper level of the B bands are moving upwards, which means that there's more room to go to the upside. And the lower Bollinger Band is starting to flatten out. So this is basically showing us that if this 1850 level can hold, we can continue going up higher. And that would also coincide with the bear flag that's being made on the SPY. So if that's the case, then that means that the bear flag is going to end up falling lower. The IWM is helping pull the SPY down, but the NASDAQ, if the NASDAQ continues to break upwards above 340 and just melts above, then, because you have to take a look, you have to take into consideration the NASDAQ is up very substantially today. All right, it did very well. But then when you look at the SPY, it did not do as well, obviously, right? So this is only the case because the IWM and the Dow were taking a hit. And unless the IWM and the Dow can begin to get a bounce, which I don't think is going to end up happening, or unless the NASDAQ just continues to skyrocket, which I also don't think is going to happen, then, that's why I think the SPY should have a bit of resistance to continue here at this 416 level. But of course, once again, we have resistance on the SPY at 416, support down here at 412, 413, and we just have to see what happens moving forward. Heading into the long weekend, I don't want to hold anything overnight heading into Tuesday, but yeah, we just need to see which direction we open, to be honest. Now, if we gap up, if we gap up above 415, 416, then we could play bullish, right? But if we gap down, then that confirms that the overall momentum is continuing to be bearish on the market. So tomorrow morning should be fun. I hope you guys enjoyed today's video. I didn't realize it was going to be this long, but I hope you guys enjoyed today's video regardless. Yeah, make sure to like, comment, subscribe. I really appreciate it if you guys watched the video all the way to the end. And yeah, I really appreciate you guys. Thank you so much. Have an amazing day. Thank you.